G'day folks, Jim here from FX Charts, Tuesday the 1st of April. Thanks for tuning in. Well, the euro survived the weaker than expected CPI, came in at 0.5%. Saw a quick dip down to 137.20, but it rebounded and was later assisted by some pretty dovish comments from Janet Yellen, who said that monetary policy is going to remain very accommodative for some time to come. So that put the dollar under a bit of pressure of its own. And we've got plenty of data coming up today. This all comes ahead of the ECB announcement on Thursday, so whether there will or will not be a rate cut. We've got all the manufacturing PMIs today, so we're going to gyrate around after those. But ahead of that, we've got a big day in Asia. We've got the Tankan coming up out of Japan. We've got the official and the HSBC Chinese manufacturing numbers, and also we've got the RBA rate decision where no change is expected, but the press statement will be keenly watched to see if it's as upbeat as Glenn Stevens was last week when he was speaking in Hong Kong. Anyway, we're going to have a look at the charts, and as you can see, the euro, it had this dip down after the inflation number, but it then bounced back really up to this sort of pivot that we've been sitting close by. This goes back several weeks. Got up to 138.08, and it's sitting just below the, well, it's sitting between the 100 and the 200-hour moving average at the moment. I wouldn't get too enthused either way with the euro, I don't think today. Depending, the PMIs might drive it one way or another, but I think the market's really looking towards the ECB on Thursday, and then of course we've got the non-farm payrolls on Friday. So in the meantime, with the hourlies are looking a little bit soggy, but the 4-hour charts, they're reasonably positive, so we may get another test of the top side. I don't really think we're going much above 138 figure 20 today. Equally, I'd be surprised to see us back down here at last week's low, 137.05. The dailies though are still negative, so I think really expect more range trading. As I say, I wouldn't expect too much either way. I think it'll just be choppy. But wait for the PMIs, and also we've got German unemployment data today. Later on, of course, we've got the US manufacturing ISM as well, and construction spending. So it is a big day of data, and we could see we could see a few gyrations, but I don't think it's going anywhere too far. Moving ahead to dollar yen, which is slightly more interesting actually. Dollar yen's it's been up to 103.40. We've now got the financial year end out of the way. The sales tax hikes are on their way in, and there is some speculation that maybe the BOJ will start another round of easing to offset the tax hikes. Now, if we go out to the 4-hour charts, as you see, we've broken above the descending trend resistance here, and if we can take that out, we could head up here to this 61.8%, the previous top, that's up around 103.70. Now, if we head beyond there, then we're going back up to 104. Not sure that we're heading up there today. We might be the 4-hour charts are positive. Much will depend on the Tankan coming out in the next few hours. And the dailies do seem to be winding. Well, maybe they're pretty flat, but they look as though they may be building up for something positive. And I think the market's likely to be putting on some short yen in anticipation of further BOJ easing. So we might see dollar yen and euro yen appreciate over the next few days. Right now, I think, you know, if we get back below to 103 to 102.65, 102.80 area, it's probably a buy on dips. And I think we should probably be looking for a move to 104 and possibly higher in the next week or so, but wait and see what happens today with the Tenkan. 103.75, as I say, will it's going to provide some decent resistance, but I'll be a buyer on dips. Sterling, a bit like the euro, it is forming this kind of base here. Really, this is a 1-hour chart. It's really a fairly short-term thing, and maybe we're heading up just towards the top end of the range here, which is about 167.30-40 area. There is resistance up here. We've on the hourly charts, we've got some resistance here at about 167, the figure, which is the final FIBO support of the whole move down, and then we've got the trend resistance at 167.40 odd, as I say. So that's off this top up here. The indicators are looking a little bit mixed. The 4 hours are they're not showing any signs of rolling over yet, but they're not looking that enthusiastic. And quite honestly, I think with the hours the hourlies looking a little bit heavy, I suspect we're probably in for some more 166.20 to 167 figure range trading. The dailies are a little bit flat, so like I say, I'm not expecting too much really today. Dollar Swiss, well, that was choppy a bit, pretty much in line with the euro. The dollar headed higher and then came off after Yellen's comments, and it's sitting now between the 100 and the 200 hour moving average. But it's holding this trend support at 88.20, and as long as that continues, I think the dollar can possibly push a little bit higher. The indicators, the hourlies, are not showing us anything. The 4 hourlies are actually a bit negative. Now, if we do break down through 88.20, I suspect we're probably heading down here to sort of this 88 figure, 80, maybe possibly even to sort of 87, 85. But if we see dips down there, the dailies are actually quite positive, as you can see. So I think dips are possibly a buy. And we may head up for another eventual test at 89, but that's going to be tricky to overcome. We've got this trend resistance and the 100-day moving average at 89.30 or so. So all up today, I suspect that 88 to 89 will once again cover it, but direction will be driven by the PMIs out of Europe later on. The Aussies are reasonably interesting. It's holding its uptrend support. Got down to a low of 92.17. It moved higher after Yellen's comments. Now we've got the Chinese PMI, the official PMI. I think that's expected to come out at 50.3. We've also got the HSB manufacturing PMI, and then later on we've got the RBA. Now, if the statement, the data out of China has obviously been reasonably soft recently. So if we do come out on the soft side, we might put a bit of a dent in the Aussie. But then later on, if the statement follows up Glenn Johnson's fairly upbeat assessment of the outlook for the Australian economy, then the Aussie could have another test up here. It's always this 92.94 area where it got to last week, and above 93, it starts to look really quite interesting. This is last week's top here, but we have to go all the way back here, and there's not an awful lot. This level up here is at 94.5. Now there's going to be some resistance before then, but it looks to me as though the uptrend is intact and the dips are a buying opportunity. The 4 hours though are suggesting that it's not going to be an easy ride today, so just be a little bit careful on the downside. I'd be a buyer of dips at down towards 92. Under 91.5, the neckline, as I've said before, I'd be out, because I think then we could see a lot of stops being set off. There's a lot of people watching all the Aussie crosses as well, and so that could get a little bit dangerous. But in the meantime, I like the idea of buying dips. And on the dailies, the resistance. Now this is a bit of a there's a bit busy on this chart, but the first Fibo of the blue Fibo lines. The resistance here is at 93.39, which is 61.8% of the move down from 97.5. And then the next resistance here comes in at about 93.80, which is 38.2% of the major move down from where was that, 105.80. So 93.39, 93.80. Once we get above there, then I think we're off to well above 94 cents. So. The dailies are positive, so I do like the idea of buying the dips. The weeklies also look as though they're heading higher. So anything, if we saw 91.75 to 92, you'd need to be a buyer. We've also got this bullish divergence here. Although the price action is heading lower on the weeklies, the divergence, the bullish divergence is reasonable. So I do think that the Aussie's got more upside in it, and I don't think that selling into rallies is a good play at the moment. Moving forward to the Kiwi, well, that goes from strength to strength. The Kiwis here is up against the 2012 high, and if we we need to, if this gets taken out up here just above 87, we're pretty much sitting on it at the moment, then we're going to head right back here, 88.42 being the July 2011 high. If we come back to nearer home, the support is at around 85.90, this trend support here, and if we go below there, then we might head back to 85.5, but that seems some way off at the moment. And if we do get a bit of a dip today towards 86, the figure, but just or 85.90 or so, I think it's a buy eventually to take out this sort of 86.98 high that we got to last week, and eventually, as I say, I think we take this out here, this resistance. Look, we're in the process of doing it already, but then we're really off to the races, I think. And with further possibilities of tightening coming from the RBNZ, I do think the Aussie and the Kiwi both look pretty good. Neither central bank will be happy with this, of course, and they'll probably continue to jawbone the currency down. But I think there is largely wasted breath for the time being. So, but anyway, we'll wait and see what happens there. But in both accounts, I like buying dips, and the same applies on the crosses: sterling Aussie, Euro Aussie, Swiss Aussie. I think the Aussies are going to gain against all those, and also Euro Kiwi as well. I like that, and sterling Kiwi equally, but it's not a cross I particularly trade too much. So that's about it today. As I say, it's going to be a pretty busy day. We've got all the PMIs, the German employment, and the RBA, of course. So keep an eye out for the China data and also the Japanese Tankan in Asia. It could be a busy day in Asia for once. So fingers crossed. Let's keep hoping. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.